So yesterday was a horrible day in the stock market, and just adding on to what has been a horrible 6-12 months in the stock market, and we are entering once again a big massive downturn in this stock market crash that we have been on. And I thought, you know what, after yesterday with so many stocks having ugly days, I thought it was about time that we pulled out the whiteboard and we went through a bit of the mindset that I'm currently feeling, my plan going through this downtrend in the stock market, and what I'm doing going forward. So I hope it's all useful. I know you guys appreciate this after a really ugly day. I've always said the red days is when you need me, the green days you don't need me here making videos for you guys, and we're going to go through this right now. So yesterday stocks dropped huge. They have been dropping a little bit more since the last kind of 2-3 weeks. We've seen a bit more of a downtrending market coming on, which before that we actually had a period of time where a good 1 month, 2 month stock prices were actually holding quite a bit. You know, a lot of the more risk-on stocks, which are the ones that have been really tumbling in the last few months, we're starting to hold a little bit at the moment. But unfortunately, a lot of these stocks once again went down, and we have so many stocks out there that are now down 40, 50, 60% at the moment. And just some prime examples of those stocks that are being hit hard are these ones. So something like a DraftKings is nearly getting back down to SPAC prices. SPAC prices it wasn't at until January time 2020. Yes, this company is basically now back at the share price it was 2 years ago. 2 years of financials totally wiped out of this company. And you look at the progress it's made, the company is now more profitable in any states than what it thought it would be. Its states are getting quicker to profitability. Revenue right now was supposed to be around 700 million. It's actually around 1.3 billion. Company is on absolutely fire. Share price, boom, absolutely wiped out. Something like a Shopify, one of the kings of the growth stocks. Everyone loves Shopify, such a complete platform. For years in the future, Shopify is going to be the platform that people go to set up their e-commerce site, or even e-commerce giants come to use it because it's such a good website. And what has happened to this share price? Boom, $481. I cannot believe we're down here. This is once again a stock that, if we go back to the CV times, is basically only up 14% since its CV lows. You know, the peak fear CV is only up 14% since then. And if we go back to before the CV times, once again, the stock is pretty much flat. You know, this is a company that has improved financials hugely in the last 2 years, benefited from the CV situation, and isn't a stock that's now having this kind of problem where, okay, it's got hard comps. It's still growing at a huge rate at the moment. Unbelievable reduction in the share price of Shopify. Teladoc, you know, the future king of the telehealth space, massive growth area, $59. This once again has a massive benefit from CV. Telehealth has been fast forward so many years now. It's got the benefits from the CV. It's keeping the customers. It's still growing revenue. What's it rewarded with? Well, the share price that it was below pre-CV. In fact, it's at the share price that it was at in 2018. This company is now valued at less than what it bought Livongo for. Absolutely insane. And I know there's going to be a few people that are going to be in the comment section, which there's been a little bit of negativity towards growth stocks at the moment. There wasn't a few months ago, but now a few people go, oh, well, it's a trash growth stock that doesn't make money. That's what a few people will say. Well, what I'll say to that is, okay, let's flick through to some profitable stocks. Let's go to Meta, Facebook, the social media giant. Without doubt, Facebook is still going to be a major platform in the next 5 years. WhatsApp is, Messenger will be. Instagram, the king of the social media space. These platforms are going to be still massive and grow massive in the next 5 years. What's happening to Facebook? Well, it's down at a 13 times earnings at $188. Once again, we go back on the share price front. Where's it at compared to the CV times? It's only 19% up, and that's in the peak CV. It's back at share prices it was at all the way to February 2018. Unbelievable. You know, this to be back at a share price it was at 4 years ago. PayPal, once again, absolutely fantastic company. 25 times earnings. Same again. When you compare it to the peak drop in CV, it's only up 3%. 3%. It's back at prices it wasn't at until January 2019. Unbelievable from this profitable stock as well. InMode, I mean, this is just the pinnacle of how stupid this market is at the moment. 14 times earnings. This company actually smashed Q1 numbers and then dropped 7%. And this one as well, this is starting to get back to crazy valuations. Basically having a year and 4 months share price wiped out. So wherever you look, if it's growth stocks that are definitely a little bit more risk on, I mean, there's loads more I could use. I mean, Alibaba, for example, or if it's actual, stocks that are generally referred to as really good high quality companies that put in good amounts of profit, even they're getting hit, 40, 50%. And that's the market we're in. That is the stock market crash that we have going on at the moment. And this is my response to this. So first of all, this is key. I am seeing this everywhere. I've just absolutely cropped my N there, but yes, negativity. Negativity is everywhere at the moment, whether it is on the YouTube comments, I'm seeing in the YouTube comments, I'm seeing it on different forums, whether it be Yahoo Finance or something else. There's a lot of negativity there. Seeking Alpha, the comments in Seeking Alpha, even on my own Discord, I'm seeing negativity on there. It's everywhere. And that's what you've got. That is probably the big thing, because what you're seeing right now is if you see negativity, you start seeing that and going, oh, are they actually speaking the truth? Is that actually a problem? And you've got to look at the negativity and deal with that and weigh that up against your own conviction, because that's what's going to be forcing you to click that sell button at the moment, is the negativity that's out there. And this is my response to this, because this is the biggest challenge. Quite often in the stock market, the biggest challenge is mindset and having the confidence to hold your stock through that negativity. And this is my response to that. First of all, where was it 12 months ago? Where was negativity 12 months ago in the stock market? Shall I tell you what? It did not exist. You could not find negativity in the stock market 12 months ago. Now, I agree, it was very much euphoria. There was a lot of people getting carried away with stocks, but it didn't exist. It didn't exist 12 months ago. And what is the difference between 12 months ago to now? What is the difference between Shopify right now? What's the difference between a company like InMode right now? What's the difference between a company like TDoc right now? Nothing. The financials are exactly the same. In fact, from 12 months ago, a lot of those companies are putting even better financials in. Nothing has changed with these companies. Nothing's changed with the companies that you invest in. What has changed is that share price. For a lot of those companies that I just mentioned, that share price has fallen over by half. And that's what a lot of people are being negative on. They aren't being negative on what the companies are doing, because the companies are in a better place than where they were 12 months ago for most of them. But what is the difference is the share price. And that's what you have quite often. There's going to be a lot of people that are emotionally reacting because the share price is down, rather than thinking, okay, the business keeps moving in the direction, where is the share price going to be in long term? Where's that share price going to be in a year, 5 years? Look at the financials, not what the share price is doing. And the negativity only exists right now because of the share price. And that's why you've always got to focus on what your business is doing and not what your share price is doing. And just going back to March 2020, March 2020 was the last time we had anywhere near this negativity in the stock market. The negativity of, there's a big, this pandemic that's going on. This could be, major problems for the economy, major, problems for businesses. What happened? Share prices got absolutely killed. And that's what negativity is going on here. At the moment, there's negativity out there. People worried about Russia, Ukraine situation, inflation, interest rates. There's now negativity back here in the stock market. And March 2020, for any of you guys that went through that, pretty much as well, more to the guys that went through prior to March 2020 and went through that dip, it was tough. It was tough, you had stocks going down all the time. There was a lot of negativity out there, people saying, it's just going to get worse and worse. However, if you looked and thought, I'm going to buy this business, it's going to be okay in the long term, what happened from buying into that last period of time where we had stocks down 30, 40, 50%? They all recovered and went to new 52-week highs. And that's what happens eventually. Positivity comes back, rotation comes back, and you get the rewards from that. And what I saw 12 months ago is everyone going, that March 2020 dip, I wish it could happen again. I wish I could get stocks at just, stupid valuations. I wish I could buy them. And what we're having right now, we're having stocks lose 50, 60, 70% of the value. It's basically a March 2020 situation. And what happened then? Well, you got the recoveries, and what did everyone say 12 months ago? That March situation, I wish it went on a bit longer. I wish I had more opportunities to buy more stocks in that period of time. And also, if I knew what I knew now, I would have bought heavier in March 2020. Or I wish March 2020 would happen, not the actual pandemic, but the share prices to come back down against them stock prices. If that ever happened, I'd be buying that dip a huge amount. Now what do we have? We have March 2020 all over again. Stocks are losing pretty much the same value what they did 2 years ago. And what happened? You got the rewards from buying the dip. And this kind of ties back into my first point that I was making, is that what I'm seeing right now is a lot of people are watching the share prices. a lot of people are getting frustrated with the share prices, and don't get me wrong, I understand it. There's a few times I look at an InMode, for example, an InMode that reported preliminary earnings, and I think, oh, those numbers are absolutely fantastic. And then I look at the stock and the share price goes down 7%, and I go, you are kidding me. Like, it is frustrating as a shareholder. I've done it. I did it the other day when I saw InMode's numbers, and when it went down 7%, I was like, this is stupid. It was frustrating. And there was a 10-second period where I go, why is this happening? This stock market's stupid. And there's part of you that goes, you know what, I wish I could just open up my broker's account and see everything up and everything in the green and think, oh, this is absolutely amazing, I love it. You do want them days, you do want it to happen, but we've had them days. We had them a few months ago. Now we're back in a negative market, and what happens in a negative market? It's the time when you want to be buying stocks. These are the times where you buy the stocks, and in the longer term, you'll have that day where you open up your broker's account and go, oh, look at that stock and how much it's up. I remember buying that at so-and-so. Can you believe people were selling that stock at that sort of price? And that's what happens. And what's happening right now is people getting frustrated with the share prices. The share price is not doing anything. Negativity, because the only thing that really changes is the share price moves down. The big thing is this: financials. With a lot of these companies now, you look at the financials. What are the financials doing? Well, since March 2020, you take a lot of these companies out here, PayPal, the Shopify, for example, the T-Doc, then financials are even way ahead where they were in March 2020. And a lot of them, the financials are still improving in the right direction. And what do you need to have a successful investment? You need the revenue to go up, and you need profitability to go up, or unprofitable companies start moving in the right direction towards profitability. That's what you need to have a successful investment. What a lot of these companies are doing right now, for most of them, they're moving in the right direction. And what's happening is their valuations are just getting cheaper and cheaper. And it is frustrating to see the stock price going down. But for most of these companies, they're positioned in really good ways where the share price is going down. But if you follow that financials, the financials are trending upwards. And that's the key part. As long as those financials are trending upwards, eventually the share price will be rewarded. And I guess it kind of comes down to, what am I doing? What is my mindset right now? Well, like I said, cheap valuations. Massively cheap valuations. Like I said, you've got the share price going this way and all the financials are going that way. And what we're having right now is the valuations are just going cheaper and cheaper and cheaper. We're having stocks trading at share prices that were at in 2018. We're having companies trading at the cheapest valuations, the cheapest metrics they've been for 4 or 5 years. That can only happen for so long. It's the same as when metrics are trading at all-time highs. That can only happen for so long. Eventually it moves back in the right direction. And what I'm seeing right now is amazing companies that are growing financials at the cheapest valuations. And what is scary right now is I looked at quite a few of these businesses 12 months ago. If I started buying a business 12 months ago and I went, you know what, I can double my money up in the next 5 years. There's so many businesses right now that have lost 50% of the value. And I'm looking at them businesses going right now and going, 12 months ago I thought I could double my money on this. You know what, it's gone down that much now. It's so cheap that business there, that stock right there, I could probably 5x my money in the next 5 years. And that's the point of view that you're at right now, is you're looking at all the stocks and going, I could have doubled my money up, but that stock has sold off so much, I could 5x my money now. And the upside now, because the financials are still improving and the share prices have absolutely tanked, that the upside on a lot of these businesses now are so high. And that's the big thing. The upside on a lot of these businesses now have massive amounts of upside. And that's the really good thing as a long-term investor, is not looking at it and going, I'm frustrated from the share price point of view. I'm looking at these share prices and going, you're giving me such a good opportunity here in the next 5 years. You're giving me such a good opportunity to make money in the next 5 years. And that's the key thing that I'm looking at. And going back to the point that people are frustrated the share price is staying down, I'm looking at this and going, the longer this share price stays down or keeps going lower, the valuation of these companies are getting lower and lower. The financials are improving more and more. What I'm having at the moment is the even better valuations for the company, and the upside for the companies keep increasing. And the longer these share prices stay down here, first of all, it's going to give me more and more upside. I talked about that I could, the stocks that I thought I'd double my money on in the next 5 years. The stocks I'm looking at now that I could 5x my money on in the next 5 years, which is insanely good. And rather than getting downbeat about it, rather than what I'm seeing at the moment, people being negative, going, oh, it keeps going down, it's 20, 15, it's $10 now. Thinking, you keep going down. You keep going down, because I'm staring at the financials, and the financials keep improving. I'm going to make more money on this. And as well as that, it is tough that we've now had basically at least 6 months period of time where we've gone through this stock market crash that's going on at the moment, and it is a little bit frustrating. But you've got to realise, the longer that, and I don't know about you guys, but the longer this bear market stays here, the more these stocks stay at these prices, it gives me longer time to keep accumulating shares and buy more shares. For me, I didn't think stocks would get this low. I thought, no way are people going to sell these stocks at these sort of prices, and it's happened. And I'm shocked, but it's giving me more and more upside here. And for me, I've already burnt a lot of cash here, so I need to keep getting cash in from working to then go buy these stocks. And the more I can buy these stocks, the longer these stocks stay at these sort of prices. And I thought 2022 would be a very bullish year for small caps and mid caps, but if it is an ugly year for them, you're going to give me another 7-8 months to accumulate shares at cheap valuations. And for me, in the long term, that's amazing, because I keep bringing my average down, and the more I bring my average down, the more it's giving me upside. And like I said, I've gone from a lot of stocks at the moment where I think in the next 5 years, okay, this can 2x. So there's a lot of stocks in that I'm starting to own that could 5x. You know, there's at least 5 companies in my portfolio right now that I think can 5x in the next 5 years. And the more I can bring my average down, the more upside I'm giving myself right now. So it's a bit frustrating to see all these share prices doing this, but you got to think from the long term. It's a fantastic buying opportunity in the long term. It's March 2020 all over again, and there's people complaining about that. March 2020 was one of the biggest wealth creators for me personally. For me, buying stocks in March 2020 gave me my best period of time where I made money in the stock market. I made a lot of money in the stock market buying in March 2020 dips. And now I'm going through this stock market crash in 2022. I'm thinking, this is going to be the next thing that creates a lot of wealth for me in the next 5 years. And I'm looking forward to it. I'm really, really looking forward to it. So that's my view on it from what's going on at the moment, negativity that's there at the moment, the stock's going down at the moment, my thoughts on it. So I hope you enjoyed it. It's been a while since we've done one of these. But if you could hit the like button, that's absolutely amazing. And I'll catch you on the next video.